When you look at some of the charts, especially those of like NVIDIA and Meta, who have been able to break out of the multi-year downtrend, Tesla has still not been able to do that, but it will. And when it does, this is kind of like the phase that I'm dubbing as the great repricing. There's going to be some catalyst that triggers it. When you model out kind of the autonomous robotaxi business, you can easily arrive at a valuation that is.
Today, we'll be doing a deep dive on how exactly Tesla's robotaxi business will unlock trillions in Tesla's market cap valuation. In what he calls the great repricing of Tesla, our guest today came prepared with a full analysis of the unit economics, the market size, the valuations forecasted. This will be by far one of the most detailed analysis you'll see. With a career in tech M&A investment banking, Justin has spent the last 10 years in startups in Silicon Valley. As a Tesla shareholder since 2013, he was part of the group that dubbed the term Teslanaires on CNBC. He's known on X for Tesla's options trading and sharing both fundamental and technical outlooks and catalysts for Tesla. We'll also be joined by Cern Basher, a chartered financial analyst who's well respected for his Tesla financial models. Thank you so much, Justin. I really appreciate this. I love your analysis and I'm looking forward to diving deep into them. Thank you for joining us.
Thank you so much. That was an awesome intro. It's a lot of stories since then, but happy to be here.
Yeah, I absolutely love that you were there from the beginning, but also you're somebody who's following this. Now we're talking about the future, Robotaxi. And other than ARK Invest, who has done deep research, your version looks so deep as well, because honestly, you've looked at, every city and what would happen to the models is very similar to what Cern does. But I want to invite both of you to do this. So let's get started with the Tesla network, how Tesla's robotaxi will unlock trillions in market cap. You've also shared this on your X at SMD Capital 88, so you can take a look at some of his concepts. What we'll do today is talk about what you call the great repricing. You'll walk us through in detail the revenue, the anatomy of a trip, the fleet types. Is it a bottom up or top down? Both kind of a way to look at the market size. And how do you do valuation? So one of the most important things you were mentioning is how is it and when is it that investors will look at Tesla stock and actually start to reprice this? So let's start with this, the great repricing of Tesla. Tell us more about this.
Yeah, sure. So, as every Tesla shareholder knows, right? It's been a pretty rough past couple of years, especially with, the Fed hiking and, all the downstream ramifications from that. I think, when you look at some of the charts, especially those of like NVIDIA and Meta, who have been able to break out of the multi-year downtrend, Tesla has still not been able to do that, but it will. And when it does, this is kind of like the phase that I'm dubbing as the great repricing, because there's going to be some catalyst that triggers it. And when you model out kind of the autonomous robotaxi business, you can really easily, I would say, because it didn't take me that long, but you can easily arrive at a valuation that is north of the current share price today. And that's discounted at an appropriate rate, something to the tune of 12%. What I believe is that there's something to the tune of 90% discount rates being applied to robotaxis and Optimus. And there's good reasons for that, which I'll get into later on. But I think overall, there's going to be a catalyst. We don't know exactly which one, but there will be a catalyst event that enables the market to apply more confidence to future projections and timelines such that they can bring down their discount rates. And as they do, you'll see the stock price react pretty significantly. That's at least my outlook. And I was really heavily involved in Tesla, specifically options, during the 2019-2020 period. And I saw firsthand how difficult it is to hold through the rally, like the real breakout. And what I've been saying kind of this whole year is the hardest part will not be holding through this downturn. The hardest part will be holding when we break out. So that's why, I've kind of taken it upon myself to not only go into as much detailed depth of Cern's work and the work of many others, but also kind of develop my own perspective and to crunch the numbers myself so that I can get an understanding of what are the key drivers of this business and how should we really be thinking about some of the more nuanced topics that have an influence in how this business is going to operate, the types of timelines, including regulations and potential government interventions that could happen later. So all these things I try to consider because my goal is to really try to stay maybe 6 months to 12 months ahead of the market in terms of what people are talking about. So I try to think of the sequence of events and try to get a clear view on that, such that I can have higher conviction in terms of the timelines. So that's kind of a little bit of background as to why I started putting this together in the first place.
Oh, I appreciate this. Like I said, very detailed, very detailed. Let's get started with this table here, the great repricing of Tesla. Can you explain to us what we're looking at?
Yeah, sure. So there's going to be a lot of text on all these slides. So, if you're watching at home, you can probably just hit pause at any time just to read through, because I'm not going to read through the actual text, but I'll speak to the slides. So for this one, the first thing you'll notice is the blue bar, and Cern has talked about this quite a bit, but it essentially represents the revenue per unit for the auto business. So anytime Tesla sells a car, it's roughly around 40 grand ASP. And then when you look at the other cluster of bars, the operating income per unit tells a much more interesting story. So when you're looking at comparing, Tesla's auto business versus their Robotaxi business, on a revenue basis, it might not be that drastic, but on an operating income basis, it is very drastic. What you'll notice here is the red bar represents what I refer to as a Tesla-owned full-time Robotaxi. And then the yellow bar is an operator-owned full-time Robotaxi. And I'll get into this a little bit later. But then the last piece is the customer-owned part-time Robotaxi. And the reason why why I believe it's important to designate, how the supply, or I should say the fleet, is chopped up between these three segments is important because there's different revenue and profitability from each unit, as you can imagine, right? If you're someone who owns a Tesla and you're like, oh, it's fantastic, I can robotaxi my car, but guess what? You still have to use your car once in a while, right? So you're only going to do it part time. So it tries to account for that. And I one thing you'll notice throughout the presentation is, at every place possible, I try to apply a conservative aspect or try to blend in various scenarios, which we'll get into a little bit later.
Okay, fantastic. So this, right off the bat, the auto business is one time, and the Robotaxi business, whether it's any of these three formats, it's all recurring and massive, much higher revenue.
Yeah, it's interesting
income.
because it enables compounding, right? And so that's what makes it so interesting is that the revenue compounds, but then the operating income multiplies. So as you're compounding your fleet size over time, the returns to the operating income level is increasing. And so it's, if you look at the trailing 12 months of Tesla's operating income, it's around $8 billion. But according to my calculations, a mixed fleet of 1 million robotaxis will generate about 17 billion in operating income. So, a loose way to think about it is for every 1 million robotaxis, it's equivalent to more than doubling Tesla's current annual operating income or profit.
And it's interesting to note too that Wall Street loves reoccurring revenue models.
Definitely.
So one day
it's
when
like
Wall Street
basically like
wakes
a
up,
SaaS.
they're going to love this model.
Agreed.
Okay, so this is what happens when it's going, but you called it the great repricing. The question is, okay, yeah, we all know how incredible Robotaxi will be in terms of bottling. I appreciate that you giving us the actual numbers. That really makes a big difference. But here you talk about, maybe you can explain this a little bit and then get into when exactly will Wall Street recognize this?
Yeah. So I'll chat about this slide really quick. What this attempts to do is try to look at, the comparison of a human versus a robotaxi, and where's really the core driving difference, right? We all know it intuitively, but I wanted to throw up some numbers. So, typically Uber drivers will make a total gross bookings per hour of about $30 to $35. That is kind of like the overall booking, so not their share of it, but just the total. Now, if you chop that between the driver and between Uber, right, it
Mhm.
looks something to the tune of like, 60-40, call it. So within that, within the driver's bucket, the red box here, the vast majority of it has to go towards what I refer to as a hurdle rate, meaning there needs to be a minimum number of dollars, per hour that a driver makes, or, if I'm a driver, that I have to make in order for me to justify driving for Uber, right? Like it can't be below minimum wage. Otherwise, that just doesn't make any sense. You also have a component of operating expenses for your vehicle. So what I'm trying to illustrate here is that Uber's take, right? When we think about this space in general, Uber's take is around 40% of the gross bookings, but their operating income is just about
Mhm.
4%, meaning they don't
Mhm.
have a lot of room to be
Yeah.
able to bring down prices or to be able to push down the take rate for drivers. So
Mhm.
they're in a huge pickle, in my opinion. And
Mhm.
I think what what will happen is Tesla will launch their services in each incremental city, and customers will move over very fast because there's almost perfect information, right? You can check multiple apps for the best price, the fastest weight pickup. Everyone does it, right? When they compare Uber and Lyft,
Mhm.
and when Tesla is there, the lion's share of demand is going to immediately shift over, and that's going to happen one market at a time. So then you have to ask, well, how many markets until Uber starts to
Mhm.
go back into the red? And it's not that many. So yeah, so I just wanted to show here that Tesla can come in and completely remove in the red box that time component out of there.
Can you just
So
quickly share what is the difference in you? Are you thinking about pricing, Tesla pricing versus Uber pricing?
yeah, I think for the first several years, it will probably be just a tad bit lower. I don't think it'll be drastically lower because I think that they will price match based on demand. So there's always an experimentation that you do with this stuff, and there's real time pricing and surge pricing that adjusts for demand. So I would assume that they would be pretty similar, if not maybe 10 to 15% cheaper. But over time, they can be literally 40% cheaper
Yeah.
without making any difference to the profitability or the operating expenses of the vehicle.
Gotcha. That's what I was looking for. Okay,
Yeah.
so what's the holdup? Why? When do you think that our shares will start to recognize this?
Yeah, this is kind of the funny part about being a Tesla investor, right? Because on one end, we understand the opportunities and are able to market size them. But then we look at the stock price and we're like, well, okay, it's like the fourth day that it's red while Nvidia is like,
Yeah.
running to the moon. So it is very frustrating. But I think what it has to do with is the confidence levels that you can apply to these projections. So when I'm making the model, for example, and I'm looking at year 2027, 2028, 30, 32, et cetera. Well, I need to have like I have to have a certain, level of confidence, right? For those future years. And so if I don't have confidence, meaning I don't know when autonomy is going to be solved, I don't know when their first market's going to launch, I don't know how fast they'll be able to ramp up, meaning their supply capacity, like, hey, how many robotaxis can I put in San Francisco? Because they just gave, approval. How many cars can I put into LA? So all of those variables have a tremendous impact on the modeling and the timelines, I should say, because obviously you can easily say, hey, by 2035, there's definitely going to be at least 5 million robotaxis. So then what's the point of doing the analysis for the first several years? Well, the problem is that when you discount, it's like you don't get much credit for it because that's so far out. So so what I'm trying to do is trying to get more of a nuanced view. And I think part of it is, just I think overall, my perspective is that there's a high discount rate being applied for those reasons.
Yeah, let's go through those reasons. So you're saying that there's a lot of uncertainty. People don't know yet. The business model, unit economics are unclear. Timeline to get to L4,
Mhm.
L5 is unclear. Launch and ramp up schedule is unclear. Competitive landscape dynamics are unclear. There's many people who think, oh, that's okay, they can do it, but in year two, everybody will just come in and make a commodity. Potential regulatory headwinds are unclear. So this makes it difficult for investors to assign a high confidence level to their financial projections. Key questions: when will the market begin to price this in? Why hasn't it begun already? What catalyst might spark a sudden change? how big exactly as the opportunity. So how do you
Yeah.
want to answer these questions?
Yeah. I mean, I think a lot of it is, just kind of creating the proper framework for how to think about some of this stuff. Just one level deeper, because, in the Tesla community, there's, especially in some of the spaces, chatter can kind of go in all different directions, and everyone has a different opinion. And so what I just try to do is just try to have a very simple framework for asking kind of the right lines of questions. Um, and I think the general report kind of goes through and tries to unpack that a bit. But I think we can probably just flip through some of these slides, and we can. It's a little bit in chronological order, so maybe that'll help.
That's
Yeah.
good. Unit economics.
Yeah. Okay, so jumping into unit economics, what I mean by unit economics, by the way, is really looking at the building blocks of how does revenue and how does maybe gross profit or operating profit really work, so that you can understand from a per vehicle standpoint, how much money can it make, and what goes into that calculation. So the first step is to determine the types of fleets that's going to be within the supply side. I believe that there's going to be a Tesla-owned full-time robotaxi. There's going to be a consumer-owned part-time robotaxi, and then a fleet operator-owned full-time robotaxi. And what I mean by a fleet operator, and I think Cern has talked about this quite a bit as well, are just, these could be individuals or companies, right? Think like a small business owner who's like, hey, I want to buy 10 of these Model 3s because, I've calculated it, and it seems like I can make about $1,000 a month for each one of profit. So why not? Because I'm an Uber driver right now. I'd rather just maintain the vehicles, right, and hang out at home and have it work for me. So
Mhm.
I think there's going to be quite a bit of that. And then for Tesla, they're of course going to operate the cyber cabs, and they're also, at least according to the 2019 Autonomy Day presentation, Elon said that all leased Model 3s and Model Ys will be up for grabs from Tesla to be able to operate them as robotaxis after those lease terms are up. And then, of course, lastly, you have the consumer-owned part-time robotaxi, which I mentioned is, individual owners, variety of different vehicles, who will commit their vehicle on a part-time basis. So maybe a percentage of owners might be interested, and then depending on how many hours per week they choose to operate the robotaxi is completely up to them. And so we can go to next slide.
Does this match what Elon just said about the bots, where he's going to both lease it and then you can also buy it? So you've basically had always thought the same thing, that that's what they would do for the robotaxis.
Yeah, well, I mean, what I mean by the lease is that right now consumers will lease like a Model 3 or Model Y.
No, I know. I'm
Oh,
aware of
okay.
that. No, I was asking a different question. Like,
Oh,
that's
sorry.
okay. Yeah, not lease, rent. I think they're going to rent it. Okay,
Yeah.
let's go to this table.
Yeah. So really quick. So what I try to do is I try to look at each individual fleet type, right? Each of the three, and then try to think about, well, what does a typical operating schedule look like? Whether it's on a daily or weekly basis. And of course, utilization might not be the same throughout every hour of the day, right? We all know that there's peaks and troughs to demand in ride sharing. So some time slots will be more efficient than others in terms of their earnings capacity. So I tried to account for that in various, base case scenarios and best case scenarios and bear case, depending on the time of day. And then, of course, you have charging in between. So basically where I landed here, and this is for the first segment, the Tesla-owned full-time robotaxis, I landed that it's possible to work 20 hours a day. What I did, though, is to make it a little bit more conservative, I applied a sensitivity under the total hours per week. There's like an 80%, 70%, 60%. And what I did was I took an average of all of that. And so that was closer to 15 hours per day. And I used that to model. And the reason why I have that is just to account for inefficiencies in general, or maybe my estimates may be a little bit off. Maybe it's not 20 hours, maybe it's, closer to 15. But either way, I think like this is just kind of a way to bake in a little bit more of a conservative approach to the model.
How does this compare to what you're thinking, Cern?
It's very similar. The maximum number of hours that I modeled out was 15 and a half hours a day. certainly the vehicles could work, 24, but there's parts of the day where there's very little demand. So it's,
Mhm.
you're not really going to get much rides or trips during those periods.
Mhm.
There's also a portion of the fleet that, during the non-peak times also won't be used. So the maximum utilization that I modeled was 15 and a half hours a day, which is about 65% utilization.
Okay,
Yeah.
so that's similar. That's great.
Hmm.
So that's the Tesla owned robotaxi model. And then this is the operator owned. So this could be a fleet manager, it could be, you think, also even individuals. So buy 10 at a time. Let's take a look at this
Mhm.
one.
Yeah. So, what I kind of landed on was that, operators will, of course, deploy their robotaxi as much as possible, right? So it'll be similar in terms of the
Yeah.
number of hours or the operating schedule as a Tesla owned full-time robotaxi. So that's kind of where I landed here. But one thing to note, of course, is that Tesla only makes about 35%, which I estimate is the take rate, as revenue for their platform. And then the operator will keep the remaining amount of 65%. So of course, it's going to make less than a Tesla-owned robotaxi, and this designation helps to make the model a little bit, or the estimates a little bit more nuanced, because you can't really assume that every robotaxi is going to be full time, and you can't assume that the entire fleet will be Tesla-owned, robotaxis, for example. So having these three different designations kind of helps to smooth things out a little bit.
Yeah. We did hear Elon himself say that he said that, yeah, we'll share it, revenue share it. And then he did indicate that the owner would make more than Tesla necessarily. But
Yeah.
Cern, didn't you always do a 50-50 kind of break?
In terms of the number of the mix of the
Percentage Tesla
fleets.
gets, no, how much Tesla gets versus how much the owner and the operator owned model
Yeah,
would
so
get.
we refer to that as the take rate. And in my models, the take rate and the cost of FSD are kind of on a teeter-totter. So if Tesla wants to price FSD high, then the take rate needs to be lower
Right.
in order for
Yep.
the economics to work out, and vice versa. So, Justin, I'm curious about what your assumptions are for the cost of FSD.
Yeah, it's funny. I in my valuation model, I actually excluded FSD completely.
Hmm.
But what I did do is I added it in towards the bottom just to see the impact on operating income. And at $300 a month subscription, it adds about 15% to operating income. So, it's good. It's a
Hmm.
nice little juice. But to your point, right, there's that trade-off,
Yeah.
right? Because it's basically like, in economics, it's called the consumer surplus curve, versus the supplier's surplus. And so, um, you bring up an interesting point about the take rates, because I think ARC had said that in their model, they went up to 60% take rate. And I just don't think it's in Elon's DNA to maximize supply surplus, right? And minimize consumer surplus. I think he loves win-win scenarios. And I think that he will keep it, something to the tune of a third. I don't really see him, pushing beyond that much further, maybe 40%, but
Hmm.
I think 60% is like, I don't think that that's in Elon's DNA. Yeah.
The take rates that I've generally modeled are around 30%, but I
Mm-hmm.
modeled FSD at 500 a month.
Mm-hmm.
So if FSD is lower than that, then the take rate can go higher. I
Mm-hmm.
think it's somewhere in that range that's reasonable.
Okay. I still
Yeah.
think what you did there, Justin, is very conservative. I love it. It makes
Mhm.
sense. So this is now customer owned.
Yeah, customer owned. And this is just showing kind of, what might be the typical number of hours per day and then days per week. And so where I landed was that, I think it would make the most sense, to be able to say, hey, look, 4 days out of the week, I'm going to have it work a morning shift. And then after I
Mhm.
get home at night, after 6:30 for the night shift, right? During the weekdays. Because on the weekends, I use it, for my family,
Mhm.
we drive around. I don't want it working. So that's where I kind of average to about 4 hours per day, assuming 7 days a week, just for the model purpose. But I think realistically, it's probably going to be something more like this. Like there's on days and off days, but of course it'll vary by owner. So that's where I landed is around 4 hours per day for the customer owned robotaxi.
Okay. Pretty good. I like it. So it sounds very conservative. I like it.
Mm-hmm. Yeah.
Love this.
And so another component of unit economics, or even just building up to revenue, is thinking about the anatomy of a trip. And what I mean by that is that you have basically 4 parts to a trip as a robotaxi. First, you're waiting for a request, like a pickup request. Then, after you get one, you're going to drive to the customer's pickup location. Then, you're going to wait for the customer to enter the vehicle. And then, you're going to drive to a destination and drop off. So, what becomes interesting is looking at, from a kind of bottoms up viewpoint, is like almost like a sanity check. This is why I did this, just to see, do the numbers make sense? Does it align with kind of my experience using Uber in San Francisco, for example, the typical costs, the typical, pickup times and all that stuff. And then what I did was I applied an urban versus a suburban, and then a base versus a best case. So again, trying to blend out and capture as much nuance as possible without, making it overly complicated. So what you'll notice here is you'll notice different inputs for each case scenario, and then also within each environment, because urban versus suburban is going to be quite a bit different in terms of the types of trips that are taken, right? Yeah. So and I can go through the numbers, but I think that might bore people. But I'm happy to. But you can just see here, and just for the assumptions, how many minutes versus how many miles. So.
Okay, now it makes a lot of sense. I'm glad you broke it down. It does make sense. You need to change urban versus suburban. Are you thinking then that Tesla will just go to urban first, like Chicago, or will they do both? Right? So you have to, don't you?
I think it depends on the March of Nines. I think at some point the threshold for L4, let's say, in certain environments will be different than other environments, right? Like, you can imagine Chicago during winter, like, okay, it's probably not going to be a great place to launch, but a suburban in Phoenix, Arizona, or a suburban in outer LA, probably easy, probably super easy. So we'll see. I don't know.
Okay, that's a good one.
Yeah. And so this is basically an overview summary based on all of those inputs for the anatomy of the trip between Uber, Tesla-owned robotaxis, fleet operator-owned robotaxis, and customer-owned robotaxis. And then looking at the base and best case for each across urban and suburban. And it gives this nice little spread here so that at least we get a bird's eye view of just, how the numbers kind of shake out in terms of how much can the platform earn per day or per week or per month. So I guess people can pause there if they'd like, but I think the next slide, I wanted to highlight something in particular, because this is maybe up for debate. So this is how the numbers shook out in terms of the implied price per mile in that red box on the right side. You'll notice it's quite higher, right, than some of the numbers we've heard about. We usually hear that like Uber's price per mile is something to the tune of like $2 to $2.50. And, robotaxis will probably be around $1 a mile. But when I was modeling it, it kind of didn't make sense, because what I realized, right, is like, let's assume that you're a customer in San Francisco, and the typical, distance is like 2 miles. So if you call a robotaxi, and the robotaxi charges $1 a mile, are you going to pay $2 for that ride? Because that seems quite low. So I tried to do a little bit more investigation into this. And what I found, at least with Uber, is they have various kind of like nuances to their pricing model that accounts for time, distance, and also a base fare. And the base fare is really the key item here, in my opinion, that's really needed to be included. And I think if you don't include base fares, then your price per miles seem much smaller than they actually are. So that's up for debate. I mean, that's where I stand. I don't know what you guys think.
Cern, you took care of that, right?
Yeah, I completely agree with you. The sort of the 3 components I have is base fare. You've got to pay for that vehicle coming to you. There's a certain amount of cost that the company's already incurred to bring a vehicle to you. So there's a base fare. Then you pay for the distance and or travel time, depending on some factors. And I also have it where, because people could fall asleep in these things, you need to pay for what I'm calling idle time. So you arrive at your destination, you fell asleep, or you're passed out drunk, or whatever the case may be. they could try to kick you out of the car by playing loud music, but if you're passed out drunk, you're not waking up for a while. So just keep charging you as though the vehicle's moving. And
So
Tesla
that's
could
where the
calculate,
Airbnb component comes in that
yeah,
Elon throws out.
right.
No, but yeah.
That's exactly right. It's your place to sleep for the night. Yeah,
That's cool. There
yeah.
you go.
Love it.
Home
Okay.
disruption now. It's all right. So this what I try to do here is, and sorry for the small text here. What I try to do here is just try to take a look at what are the operating expenses related to a fleet and trying to account for various things. So one thing that I found interesting, right, is that when people talk about gross profit versus operating profit, it's kind of hard to like get a sense, at least for me, maybe it's not hard for other people, but it's hard to get a sense of like, what do I actually put in the cost of revenue bucket versus the operating expense bucket? Because that has ramifications for how gross profit versus operating profit is calculated. So I kind of just took a stab here. I think that's why in my model, a lot of it is focused around operating income because it's just, the bucket that captures everything versus gross profit. It's kind of up for debate, like which items are included. So I don't really bring up gross profit too much just because of that. But basically, at the green box at the bottom, shows that there's something to the tune of around a 70% operating margin. And and this is kind of for a full-time fleet. So, it's obviously going to be higher for customer owned and for operator owned because Tesla just receives the check, right? They just get their take rate. This is for the actual operational aspects of a Tesla owned full-time robotaxi. And I'm arriving at around 70%. And in my model, I actually reduce it down to just 50%, again, to add a little bit more conservative assumptions into it. So that's really the big takeaway here is that, when you kind of like take into account, tires, maintenance, depreciation, charging costs, storage and parking, payment processing, insurance, you're still kind of getting to that 70% mark, which is incredible. So I try to include as many costs as I could. I don't know if there's any big bucket items missing. I even included Optimus or cleaning. Because I actually think that they'll use Optimus to maintain their fleets. So I don't know. Yeah.
What do you think,
Justin,
sir?
I think you're spot on with this in terms of the things that you've included and directionally, and I've arrived at very similar numbers in terms of like my gross profit percentage is around mid 70%. Net after taxes of in the 40s.
True.
Very similar. My revenue per mile is around $1 a mile on average, and the cost per mile is around 30 some cents, down to 25 cents depending on utilization. So my model is not so dependent upon how many vehicles are in the fleet. You've got a million models here. Mine was looking at more just the unit economics, at massive scale. So perhaps my numbers are further out than what you're showing here. But just in terms of the profitability model, I think they're very similar.
Yeah, and what's so funny about all of this, right, is that you can for the most part you can do napkin math, and I think you get pretty close. And so the models and kind of like the breaking down of stuff just helps to kind of get a little bit more nuance. But I think generally speaking, a lot of us are landing around the same places, which to me is encouraging.
I think so too, and we're coming at it from different points of view and different angles. Absolutely.
Yeah.
I mean, 70% operating margin is unheard of. I mean, that's a software company right there. So there should be a repricing at some point.
Okay. Yeah. And Cern, I don't know if, like, how do you think about the costs associated with, let's say, the money they make from their take rate of customers and fleet operators? Like, I don't really know what costs might be associated outside of maybe SG&A, like, customer support and, stuff like that.
Yeah, that's a good question. And we're hoping to learn on 8.8, some more details about how they envision the structure of this going. There will certainly be some, operations costs with respect to that. But at scale, it's not going to be much.
Right. Yeah. So I figure, something to the tune of like 80, 90% margin should be probably fine.
Possible.
Yeah.
That's
So.
crazy. Okay. Let's take a look at customer owned ROIs.
Yeah. So going back to Cern's point about this, right? This table, helps to illustrate, just a basic sensitivity based on the utilization model that I have, and tries to look at, the green cells, which are basically highlighting any figure that is above $900 of monthly net revenue for the car owner. So this is
Mm-hmm.
how much the car owner can make. And so what this looks at is like, on the top is the total number of hours per day.
Wow.
And then on the left side is the total number of days per week. So if you wanted to optimize, let's say, for the least amount of days and you want it to
Mm-hmm.
run, as much as possible, you can have it at 3 days per week, working 10 hours a day, and it'll make you, above
$1,000.
$900, which I believe, covers basically the entire car,
Yeah.
FSD, maintenance, for the most part. So it's kind of looking at what point can I have my car pay for itself? And for a lot of people, that's a game changer, right? So,
Yeah.
so that's why early
Wow.
on, I mean, this was probably even a couple of years ago, I kind of landed, like, at least just from the logical sequencing, is like, wouldn't Teslas be permanently sold out? I mean, I can't
Yes, they
imagine
will be.
they're, yeah, I mean, it's basically like having a free car. All you have to do is clean it once a week or something, or once every few
And
days.
all Teslas, including the previous ones, the used
Right.
cars, everybody will buy those out. But if I can get $950 a month, if I just do 10 hours a day just for 3 days, that I would do that, right? Because again, I work from home. It's
Hmm.
easy for me to not be worried about having a car from 9 in the morning to 5. You know what I mean? And then I would need it for dinner and going out, or maybe some days, right? So 3 days,
Exactly.
the vast majority of people will just, and it pays for everything.
Yeah.
It just doesn't make sense. This is complete change in car ownership.
This creates, though, an interesting problem
Mm.
because if these are the economics, then the value of a car is worth more than what Tesla's selling it for,
200
Hmm.
grand, right? It won't be just 50 grand.
right? And so, do you have a massive increase in the cost of buying a Tesla if you want to buy one? Or do they continue to sell Teslas for where they sell today or lower, right? Like you're turning a vehicle into a money making machine. This is something I talked about before. The nature of that vehicle is totally different. The value of that vehicle is totally different. Therefore, Tesla could sell vehicles for much, much more if this is the economics for an individual owner. Now, as Justin
Hmm.
has showed very, very nicely here, that it greatly depends on how many days a week and how many hours a day. It's also going to depend not on just the number of hours a day, but what hours during the day did you make your vehicle available? The morning rush hour, afternoon, evening, busy time? Or did you just make your vehicle available, during a slack time from, let's say 11 a.m. to 2 p.m.? That vehicle is not going to make as much money as if it was available during rush hour. So
Hmm.
all these nuances are really going to matter in terms of the economics for individual owners.
Hmm.
But on average, I think what Justin's showing here is really nice. And the question then is, if that's the case, if I can get my vehicle for free, then Tesla's not charging enough for the vehicles. They're leaving
But
money on the table.
yeah,
Right.
from my perspective, I think it's kind of related to FSD, right? Where we're like, the consumer surplus aspect. Because
Mm-hmm.
if Tesla starts to price it based on the expected value of the future earnings, then that's another way of kind of squeezing out the consumer surplus.
Yeah.
Um, I think you want to be aligned, and so I think he'll want to make the money back through the take rate and the FSD. High margin, everyone wins, and it gets to scale out really fast and really nicely. So I don't know. I kind of, it's a toss up, but I think, just knowing Elon, I think he loves to make win-win scenarios. He loves his customers and fans, and I think he'll do something that makes logical sense under scrutiny.
There's
Yeah.
also the situation where the take rate is not constant.
Mm.
That if you hit certain levels of income, maybe the take rate goes up or
Mm.
goes down depending on how they want to
Hmm.
structure it. But the take rate isn't necessarily a fixed number. To encourage people to put their vehicles into the network during rush hour when they need them the most, drop the
Mm.
take rate. Make that
That's a
worth
great point.
people's time to do it. And
That's
then
brilliant.
at other times, you raise the take rate. So that's a very adjustable thing to change behavior.
Oh, that's fantastic. Yeah, that makes perfect sense, because what Uber does is kind of the inverse of that, which is they add bonuses,
Mm-hmm.
right? And so if you are reducing the take rate, you're effectively increasing the take home pay for the owner.
Yeah.
So that makes sense. Yeah.
Mm-hmm.
Let's keep moving. Market size. This is great work. Thank you so much, Justin.
Yeah,
I
of
really
course.
appreciate you sharing with us. It's so much more of a deeper dive, and we're there.
I appreciate it. Thank you. Yeah. So market size, and I use that term just because it's more of a broad term. But what I was really trying to get at was, I wanted to ask this question, like, how many cars can you put in San Francisco, or how many robotaxis can you put in Los Angeles? And the whole analysis behind that was to try to get a sense of, what does bottoms up demand look like? Because ultimately, the question you want to answer is, if you have a population of 500,000 people, A, how many users will use it in a given month? What percentage? And then B, what would be their actual behavior, meaning the number of trips they take in any given week or the total number per month. And then you want to work backwards from the utilization model, which is saying how many rides can a robotaxi perform per hour? And therefore, you arrive at this figure of, how many robotaxis you can put, assuming demand is linear, which is not the case, right? So that's why there's an additional analysis around peak fleets. And you guys probably remember the talk with Bill Gurley and Brad Gerstner not too long ago. And Bill's, biggest, I guess, he thought it was like a big gotcha moment for Tesla, right? He was like, well, either Tesla has to build to average demand, meaning, they have, enough fleet to match, what was it? It was like, versus building a peak. So building a peak would mean that you would have a lot of downtime, because think about it like this, right? If you're building a peak, what does that mean? That means Friday and Saturday nights, when there's tons of demand and not enough cars, you don't want to let your customers down. So you theoretically could build to peak, which means, though, let's say Sunday morning when everyone's hungover, no one's going out, demand's really low. So then you have these cars sitting around. And so Bill Gurley's point was, Tesla will have to make a decision between being unreliable to customers, meaning building to average, or taking a hit on capex and kind of the, I guess, general profitability and utilization rate, by oversupplying, basically. So it's an interesting question, but I think ultimately, I don't think that that'll be as big of a problem as they presume.
No.
So
I don't think it is either, Justin. I did some work on this, and I showed that I satisfied myself that Tesla would make it up in volume. So what they might lose in terms of margin per vehicle, by having more vehicles out on the road, the total dollars that Tesla earns is not affected. So
exactly.
in my view, they want to optimize for customer experience.
They will. Yep.
Not for utilization of the vehicles.
Yeah,
Now,
the
this
margin's
is
so
where
high.
potentially, though, it hurts the individual owned vehicles, right? Because if they're not trying to maximize the optimization of your vehicle, that could hurt me depending on how they share the revenue. But what they might do to deal with this problem is to say, okay, I live in Sarasota. They may say, okay, Cern, you're part of a pool of vehicles in Sarasota, and you're going to get the average revenue from this pool over this time period. So it's not just dependent upon the usage of my vehicle, which Tesla might throttle down because they want to make sure that the whole network experience is good for customers.
Yeah.
There's a lot of complicating things here that they have to take into account to make sure that all parties are happy with the outcome.
Exactly.
Yep.
Yeah. So going back to, the market sizing, so there's kind of a top-down approach, and then there's a bottoms-up, which I'll get to next. But the top-down, basically looks at PMT, or passenger miles traveled. And this specifically is looking at the United States. And that number is roughly 4 trillion miles per year. And, it's kind of cut up between different types of use cases. And I think one thing that I haven't been able to find is the breakdown of this 4 trillion miles in terms of the actual uh, sort of like vessel, if you will, right? Whether it's a car, whether it's a bus, whether it's a train, I'm not sure. But that would have some, some impact here because, of course, if we're using top down, one of the weaknesses that you're looking at it from the lens of like basically like, okay, this is how many miles like people need to go by some means, but a big portion of it is probably covered by their personal car ownership. And so it's hard to kind of nudge that a little bit. Like, for example, right, like I own a car, and yes, Austin, is a bit of a drive. So if I want to go out drinking, I probably don't want to drive. That might be a use case. But if I need to go to the mall, I'm probably just going to drive. I'm not going to take a Robotaxi. So it gets a little tough. And that's why I kind of wanted to build a bottoms up approach, just to look from like the demand side. Because I know people like Gary Black, likes to bring this up as like a counterpoint, where he's like, oh, everyone's just looking at how many Robotaxis you can deploy as opposed to looking at the actual demand. And so I wanted to address that with the bottoms up approach. But before going into that, I'll talk about top down for global, I guess, really quick. So what this looks at is the OECD countries only. So meaning the developed countries for the most part. And it's about 11 trillion passenger miles, which seems a little odd because, with the United States at 4 trillion, I mean, that's pretty significant, but I guess, I'm not sure, like, for example, Japan, it says they're 600 billion, but what is the breakdown between cars versus trains? Because I know for a fact, the vast majority of people in Japan use trains. So I'm not exactly sure, if that should be part of the TAM for robotaxis or not. I don't know. So it's a bit of a question mark, but generally speaking, I still want to get tops down. What does it imply for the total number of robotaxis, and then a bottoms up to kind of get a little bit of a range. So where I landed here was if you have close to 11 trillion passenger miles, and let's say each vehicle is conservatively, this is a conservative assumption, is driving 80,000 miles per year, this still lands at 130 million robotaxis globally. So it's a lot. I think, and what I put at the bottom here, right, just to account for the discount, it's like even if only 50% are obtainable, meaning like it's part of the obtainable market, then the global capacity for robotaxis is still 65 million. And remember what I said earlier, right? Is like in the beginning, it was like 1 million robotaxis is about 17 billion in profit.
Just for Tesla,
and if I think the thing that I'm trying to get to is like, can I have a high degree of confidence that we can get to 5 million robotaxis? Because at that point, we're talking, Tesla being the size of like Aramco plus Apple type thing. And then, anything above that would be cherry on top. But I just want to get to like, hey, how sure can we be that we can reach, a couple $1,000s per share, over the next 5 years? So,
Justin, I'm curious as to your thoughts on how these passenger miles might be impacted as the cost of transportation comes down.
Yeah, right. I think we talked about it with James Dalma. It'll definitely go up, right? So I think it'll be really interesting. And this is kind of going back to the point I made about innings. It's like, maybe for inning number 5 or 6, maybe then, total miles might go up when robotaxis become really proliferated and much cheaper and at scale. But I think maybe for the first few innings, might not shift that much, right? Like, but then again, I mean, people, who live in urban environments, they're probably going to be going out much more often. I'll tell you that. I mean, the convenience factor is huge. Like having to walk in San Francisco, for example, versus taking an Uber across town, it's a game changer. So you can, go to more places. So, we'll see.
Okay, keep going.
Yeah. So for the bottoms up piece, what I tried to look at first was how Uber thinks about it. And this slide is taken from their investor day. I think it was like 2023, no, end of 2023. So beginning of 2024. And what they had here was basically, a division between users in terms of monthly trips. So what they found is that 50% of consumers only take about 1 to 2 trips per month, which makes sense, right? Intuitively. Like most people are going to be pretty occasional users. But then you're going to have these pockets of like increasingly power users, right? And so in the next slide, what I jump into is I tried to spread out, 4 different user cohorts to try to roughly reflect this. And where I landed was like, having an ultra powered cohort of maybe 10% of the population. So think of like the top 10% of users, taking X number of rides per week. Where I landed was like, 5 rides per week, which isn't too crazy if you think about the fact that most of the time, if you're going somewhere, you have to have a ride back. So if you go to one destination, that's 2 trips. So, thinking, okay, doing 5 destinations a week seems pretty conservative. But started there and then kind of worked my way downwards. So think about power users only at 3 times per week, casual users maybe 1.5 times per week, and then rare users at half a trip a week or 2 trips a month. And so, to your point, Cern, about price elasticity, what I tried to factor in here is just try to think of like, how much more often will people use ride sharing if the price was nearly half off? And so on the next slide, I show kind of the implied number of trips per month per user. Or actually, before going into that, this is just to show visually, I guess you can actually go to the next slide. Sorry about that.
Yeah.
So in this slide, this just shows kind of the marginal willingness to pay curve. So as price comes down, demand goes up, right? And so after a certain threshold, it starts to disrupt car ownership. And then we can go to the next slide. Here, Uber kind of reinforces that with this slide, again taken from Investor Day, but this is 2022. And what this shows, at least according to them, is that as price approaches $1 per mile, they expect that their TAM increases by 25x, which is pretty insane. So, and they even state here pretty clearly, like this is about autonomous vehicles. They said this was 2 years ago at this point. They're like, AVs have the potential to improve safety, increase service, quality, and unlock new use cases. So by bringing down price, demand will go up. We know that, we just don't know to what degree. Is it linear? Is it geometric? It's probably geometric to a certain extent. So that's why I kind of show that, the numbers that I use, like, 3x basically, is, maybe arguably conservative relative to what Uber believes. It could be closer to 25x.
Wow.
I don't know if it can get there, just the way that I have the numbers, number of trips per week, for example. Like, I don't know if people will go out, let's say, like on like 2 or 3 trips per day just because it's so cheap, but maybe they will. I don't know. But I'm trying to be conservative to at least begin with, and then we can kind of build up from there.
Yeah, I've already known people who decided I'm not going to buy a car. I'm just going to go Uber every day, everywhere, because the cost of a car, it's probably cheaper to just Uber it at the old prices a year, 2 years ago. So the more people will just do that. I'll just Uber every day. Yeah,
totally, 100%.
And if Robotaxi is that much cheaper, then the number of people that make that decision grows exponentially.
Correct. Exactly. And so what this shows is just kind of the implied number of trips per month for each user cohort, assuming that price is about 40% cheaper than Uber. And then what I kind of have here on the right side is I refer to it as round trips. So that's just how I like to think, because more often than not, when you take a trip on a Robotaxi, you're probably going to need to go back. So, I try to just get a sense of like, is it too crazy, or do these numbers make sense? And where I landed here was like the implied weekly round trips for ultra power users would be taking 1 round trip per day. I think that's pretty reasonable. And then the next cohort would be, closer to 4.5 trips per week, right? So close to half, and then another half from there, and then another half from there. So, time will tell, right? Maybe you could argue this is a little bit too bullish in terms of like the total number of rides demanded, but this is just looking at urban environments for the most part, because I have here urban versus suburban. But for the analysis, I only use urban because I think that that's where, you're really going to get most of the use case in general.
Okay.
Yeah. So on this slide, this is where I factored in kind of the utilization analysis and then tried to get to, well, how many rides per hour can a full-time robotaxi or customer-owned robotaxi do? I landed around 2 rides per hour, and then looking at the number of hours per day, and therefore the number of rides per month that this vehicle can complete. And this will be important for the next slide later on. But basically what I'm trying to answer is, I'm trying to get a sense of like, okay, if you have a population of like 500K, how many robotaxis can it support, right? So that's ultimately where we're going with this. And in the next slide, we'll be able to unpack it one step closer.
I love this
So
slide. Wow.
yeah, so here
Wow.
what I did was I downloaded the population data for the top 800 cities in the United States. This list covers about 130 million people, so only about half of the United States is captured in this list. And what I have here is I have the city, the state, and the population size. And then I had an assumption around the percentage of active users. So remember, when for the user cohorts, most people are only going to use it pretty rarely. But what I try to factor here is like out of the general population, what percentage of them would fall into one of those buckets that I mentioned before. So I figure maybe 3 out of 4 people, these are metropolitan areas. I think 25% of the population might be too young or too old to use it. But I think for the most part, most people need to get around, and they'll most likely take the cheapest, most convenient, and safest option. Robotaxis will be much better than anything else. So 75% is what I assumed for most cities. And then for smaller cities, I actually changed it to just 50%. So with population under 200,000, sorry, it's not listed here because the screenshots, you can only fit so much. But for population under 200K, I have 50%. So yeah.
Okay.
Yeah. And then I think we can, and so what I did was, I just designated them into different user cohort groups and then determine the total number of rides, because on the next slide, we'll be able to look at, well, what does that imply for the number of robotaxis you can put? Because now we figured out how many rides are going to be requested in every city based on their population size and based on a user cohort. So it gives us a general sense of like how many rides do we need to fulfill? But the big caveat here is that this assumes equal distribution of rides, right? Which is not going to be the case. So you should view this as, the minimum number of vehicles needed, because you actually need more because some of the demand is clumped up, right, into certain parts of the day and parts of the week. So you'll need actually more cars than is listed here. Nevertheless, where I landed for the top 800 cities, in that area above it is the sum of the entire column. And so that's around 2 million full-time robotaxis for the top 800 cities.
800 cities. All you need is 150,000 full-time robotaxis for New York. Chicago only needs 48,000. I thought the number was closer to 100,000, which is what, how many Ubers I thought that James Dalma said was available in Chicago. But because they're Ubers as opposed to full-time, is that why it's only 48,000?
Yeah. Yep. Because full-time is 14 hours a day. And Uber drivers, the stat that I saw was that the average Uber driver works 20 hours per week.
Yeah, half. Yeah. So this is fantastic. I mean, this blows me away. This is important that you did this, because now you can see which cities are more likely that Tesla will launch it at. Of course, you need regulation. You need just a variety of other considerations, but you don't need a lot. You don't need that many cars out in the road.
Yeah. I actually have a slide later on, looking at the regulations per state, because, to your point, I mean, that's basically where I was trying to get to, is like, okay, we have a sense of the supply now and the capacity by city. Now let's look at the regulations, right? Because we want to get a sense of like, okay, which states are going to be first and how big are those markets? And therefore, what kind of ramp schedule are we looking at potentially, if things go smoothly. So before getting to that, I'll jump into this slide, which again goes back to the peak versus average right? Demand. And so what I put here was just a simple multiplier and just try to think about, okay, well, during peak times, like how many more cars would you need? You maybe 30, 40, 50% more cars. So somewhere around there is kind of where I landed. And so on the right side, the table on the right side, that looks at basically splitting up between full-time and part-time, because the other column in the table just looks at only full-time or only part-time. And so what I wanted to get was a little bit of a blend, right? And so this one's a mixed fleet, which is where I use for most of the analysis. And it's basically saying 75% of robotaxis are going to be full-time, 25% will be part-time, and then looking at how big would the fleet be. So for the top 800 cities in the United States, I'm landing somewhere around 4.4 million to 5 to be able to meet peak demand. So even if I'm off by a factor of 2 and it's only at 2 million, that's a tremendous amount of value, because at least according to my estimates, 1 million robotaxis should generate around 17 billion of operating income. So that's more than double what they currently make. So if you got a couple million, the stock should be doing pretty well.
I love it. This is so good.
Yeah, and then on this slide, so this kind of enables us to answer the question. Well, if you have let's say a population of 100,000 people or 1 million people, what's like a general number of robotaxis that you can put into it? And so what I have here on the left side is like that full-time only or part-time only, and then on the right side I have that mixed fleet kind of calculation. So for every 1 million people, you can probably think to yourself, you can squeeze 30,000 robotaxis. Some of them are going to be part-time, most of them are going to be full-time, but you can think roughly 30,000 for every 1 million.
Wow. Can you imagine like a small city, like a small suburb, 200, 300,000 people, you only need 9,000. Everything happens like you said, we'll start buying Teslas. You can fill that up just by customer-owned vehicles.
And if you think about, let's say, a city with 100,000 people, how many vehicles are in that city? Way more than 3,000. Right? Just today, like ICE vehicles. So this just shows with autonomy, how far fewer vehicles you need in order to satisfy the demand for transportation.
Exactly. And remember, for these populations, they only assume 75% penetration.
Yeah.
Yeah. So it's actually, a little bit, it could be larger, right?
Yeah.
But
okay, let's keep going. Summary.
Yeah. So this is just a summary slide. It's, has the left side, it shows the top-down estimate summary. So looking at each country, and then the total PMT, and then the total robotaxis, and then the bottoms-up estimate based on the population size and the mixed fleet requirement. And then I applied some sort of like discount just to account for the fact that what percentage is going to be urban and of age. So meaning like not children and not senior citizens who won't be using robotaxis, or maybe they will, who knows. But I just wanted to discount it a little bit. So I said 60% of the total would yield around 50 million globally, mixed fleet. So if you think about the range, 50 on the lower end to 130 on the upper end is, the truth might be somewhere in the middle.
Wow. 50 million robotaxis are required. Okay.
Yeah.
I think I was going to say.
And this is just developed countries too. This is not looking at.
Yeah. Did we not hear Elon say that 100 million at some point, the fleet will be 100 million cars out there?
So Justin's work supports that. Yeah.
Yeah. And also, this is just for robotaxis. There's still going to be a lot of people who want to own their own car. So, when you said 100 million, that probably includes customer-owned vehicles, I would assume.
Yeah.
Yeah.
Okay. So you think US?
Yeah. So this slide, then kind of brings together a couple interesting things. It brings together that kind of like supply side capacity, and then it brings together the regulation, friendliness. And there's a website, I think it's sourced at the bottom of this slide. Everyone can check it out for themselves. I use ChatGPT to help summarize because there are a lot of pages, and help designate, sort of like friendly versus unfriendly versus neutral. And I have some slides that kind of define like what each one is and which states are included. But this is just a snapshot, and I'm going to finish the rest. There are some states that were just missing from the analysis. Maybe they just don't have anything published. But you can see here just the number of blue and yellow, or sorry, green and yellow. There's a lot of green and yellow, and neutral is not bad. This just means that they're not like friendly. They're not like they have regulation, but they're not like super friendly and welcoming. They just might be like have kind of like standard examples. I have a bunch of them on the fuller report. I can probably pull up and share that later on. But yeah, so this just shows, I think to your point, Herbert, I think actually both of you have really changed my mind on this topic. Originally, I was very concerned about regulations. And I thought to myself, there's going to be some significant headwinds. And that's why I asked Elon, I was like, when can we get the first pilot program? Because this thing that, whenever you're working with governments and local jurisdictions, it's a bit of a domino effect, right? You need to like kind of like, there's like a sequence of events that needs to happen. And so I thought, if they're not even launching pilot programs, they're probably not even thinking about robotaxis yet. Might be too early. And so for me, the biggest signal would have been, when will they launch their first pilot program? Even if it's supervised, meaning there's like a driver there, but it's still doing ride hailing using FSD, but someone's watching it. But where I am now is I've completely shifted that viewpoint, because now I see pretty clearly there are going to be a lot of cities for the first couple of years that can be launched. So, and then let's say, for example, other jurisdictions, think of it like a spectrum of like friendliness, right? And how quickly they would approve. The early adopters, right? There'd be enough for like the first couple of years, in my opinion. And that first couple of years gives all the data, additional data and statistics to jurisdictions further along that spectrum of like, let's say conservativeness or risk averseness, right? Or just generally unfriendliness. So I think at least for the first few years, there won't be major issues. That's where I'm landed now, especially after seeing, the regulatory breakdown and then looking at it by market. It's like, California, Texas, Florida, Arizona, boom. Like that already is like over 1 million units at scale. So we don't have any kind of like major headwinds, in my opinion.
Yeah. And look what's happening in China. The government is supporting autonomy. They're fully supporting it. They've already assigned 7 cities. They've already welcomed autonomy. They've already done it. When China does this, what does it do for the other countries? Can they afford to delay? And also, people don't realize this was a shock to me, but I found out 3 months ago, that by default, every single state in the United States, you have the right to launch and first pilot, but also launch a robotaxi business. The 10 states that have actually created regulations, they're in support of robotaxi. They just wanted to, put a little bit of regulations around it so they can control that a little bit more. But they actually are in support of it. And then, so it's actually the opposite, where people think that, it's by default, you are not allowed to, and then they have to now work to create that. It could still be, one stroke of the pen, and it can say no, right? They can do that too. I'm not saying that. But at the end of the day, there are enough, like you said, that's going to be ready for the first several years. And then, like you said, by that point, others they'll need to do it because the evidence will be so strong.
I would just add too that the states have every economic incentive to make their transportation system safer.
Yeah, it's a great point. I would say maybe if I can just share really quick, like what freaks me out about potential government interventions, because there's the binary aspect, right? Like approved or not approved. But then the next order of problems, if you will, is whether or not they'll apply a fleet cap or any kind of fees per mile under the guise of, let's say, being friendly towards competition or saving jobs from the robots, right? they might, either levy fees or limit the number of robotaxis, under the actual capacity. So those are the two things that freak me out,
Sure,
aside from
but
actual, approval or not.
do you know what you sound like? You sound like exactly what people were saying when Uber was trying to get in. And it was a major political battle. Uber won because the cities were trying to save the taxis. Unfortunately, the consumers stood up, and Uber was smart. They gave consumers free rides, cheap rides. And so they got, what are you talking about? I can't have it here. And of course, later, once they own the market, then they raised the prices again. But you know what I mean? Like Uber already battled this and they ended up winning.
I would say the only maybe difference though is that, well, for Uber, right, it was like the people. Uber was on behalf of the people. Whereas in this case, maybe
Drivers.
it might be on
Right.
behalf of Tesla, right? Or
Gotcha.
or even the owners, the Tesla owners. So I don't know. I because it'll be adversarial against the common people, right? The drivers, the Uber drivers.
But the price could be so low that it's like, why are you, your bus is, I don't know. Okay.
Yeah. I mean, we'll see. That's just something that kind of,
Okay.
I would just
Let's
add
get to
that in one of the conversations I had with a local politician, she was very interested in all the ways that we could drive down the cost of transportation for her constituents.
Yeah.
There are
Could be the opposite.
a lot of lower income folks, a lot of women with kids that access to transportation is an issue. The cost of it is too high. So a lot of politicians will be very supportive of alternatives to what's available now.
Totally agree.
Let's get to the fun part. This is, what does it mean for Tesla stock? When can we see the stock go up? What is the considerations here? This is great.
So with this section, what I tried to do first was to think about 3 different cases, okay? And it's listed there. It's a little bit small print, but you can see there's a bear case, there's a base case, and a bull case. And the different sort of variables between them are which year do we launch? And by launch, I mean putting 15,000 units, right? So it's a very small pilot launches, right?
One city.
But launching nonetheless. So which year do we launch? And then at what year do we hit 1 million? And what year do we hit 5 million? And perhaps later on, 10 million. So it's a 10-year model that I have out to 2035. And I wanted to at least get a sense of like, how does it change if the launch date changes, okay? So as you can see here, this is a bear case, and it's just looking out, it's just to show kind of the first couple of years is zeroed, and then we have the launch in 2027, and then scaling from there. And on the next slide, it'll show the base case, which brings that launch year forward by 1 year to 2026. And then the bull case on the next slide pulls it over one more, right? So I just wanted to show this, to preview this before going into the model, just so that you understand that there's a bit of a spread here that I have, again, to just capture a little bit more nuance and see the range. So on the next slide is kind of some of the outputs, I believe. So what I have first is a DCF model using perpetuity method and exit multiple method. And this is the general spread. So on the bear case, you'll notice the difference in the starting price, right? 138 versus the base case of 163, and then the bull case of 198. The difference is roughly $30 per year, basically, of like launch delay, right? So if the launch is pulled up to 2025 relative to 2027, there's about a $60 difference to today's price, discounted at 12%, which is a reasonable rate. And so I think what I'm ultimately trying to land at with this is to say, look, if there was a proper discount rate being applied to Robotaxi, the stock should be valued, should incorporate anywhere from $138 all the way up to $489. And this is based on, the full range, right? From the lowest bear case scenario to the highest bull case. And so the big question is like, oh, the stock's like 180. So, what portion of this is factored in? And that's where I kind of landed on the fact that like there's probably something to the tune of like an 80-90% discount rate being applied, because clearly the stock should be much higher today if there was more confidence. And so to answer your question, I think I have a slide actually in the future coming up, but there's going to be a catalyst that triggers more confidence. I don't know which one it is, right? We saw little pieces of how the market reacted when, FSD China news kind of released, and, some of the meetings with the senior politicians there. I think, the stock had a really great reaction to that. So I think, it's going to be a little bit hard to predict exactly which one is going to be the catalyst. It could be as simple as it'll be 8.8, and maybe something will be said that was unexpected. Or it could be some other catalyst, maybe throughout the rest of the year or early next year. But at some point, that will need to begin being priced in. So even at minimum, if we're talking $200 a share for autonomy in today's price, that's more than double where the stock is right now. So we should be much higher. And I think that repricing lines up well also with the technical charts too, just in terms of the outlook and what NVIDIA and Meta had experienced this past couple of years. I think we'll see something very, very similar.
Okay. And then you have a lot of financial models here to share.
Mm-hmm. Yeah, this is just kind of a snapshot, just showing kind of like how the numbers kind of shook out and how the model is built. So it takes a look at the total gross bookings, which is the sum of the three different supply side types, I guess you could say. And then the implied total net revenue, which is basically net of the take rate. And then I have a couple kind of sections here just looking at the revenue for each segment, and then the total operating income at the bottom, which applies like an 80% margin for non-Tesla owned robotaxis, and then a 50% margin for the Tesla owned robotaxi. And remember, the local P&L market that I had showed around 70% for Tesla owned operating margin. But here I just apply 50%, again, to try to be conservative. Yeah. And then at the top, of course, I have some of the catalysts. You can see they're just kind of like smally notated, but these are just little notes to myself just to keep aware of like my expectations. So for example, next gen production should begin in 2025. FSD China and North America should be launched. First FSD licensing deal should be announced. And then in 2026, we have Optimus production beginning. We have FSD in Europe, which might be closer, but I'm going to say, by 2026 for sure. And then, just given how it's scaling, we should be surpassing Uber and Lyft sometime in 2028 or 2029. And then Morgan Stanley in 2030 estimates that there will be a global fleet of 25 million vehicles by then. So again, just as a way for me to sanity check and all that kind of stuff. So,
okay.
Justin, when you think about your model, you've modeled out bookings, right? Revenue from trips. What are your thoughts about other potential revenue streams? Are they even worth thinking about in terms of advertising or entertainment, connectivity, distributed inference in the cars? Elon has made quite a few points lately about that.
Yeah.
Just curious as to what your thinking on that is.
All upside. Upside. Yeah. Because, I think what I tried to do is try to get, as conservative as I can, but not conservative just to be conservative. More like I would call conservative realistic, right? I don't want to, undercut, the estimates too much. Like, for example, I saw one analyst, I think, put out that Tesla's take rate would be 20%. And, and they still came up with a really high valuation. You probably remember it was some guy that tweeted, probably from Motley Fool or something like that, or whatever. Yeah, so I think, it's all upside for me. I'd rather just get bare bones. Like, how can I have a super high confidence level and have conservative inputs, and then, still have a good number, that I'm happy with. So,
yep,
makes sense.
Yeah.
Okay.
But I agree with a lot of your points. I know that you have various revenue opportunities for robotaxis outside of just the rides. Totally agree with it. So,
Yeah, I've taken the same approach as you. I've included them, but they're so minimal that it doesn't really matter.
Yeah,
But I
yeah,
include them so that I don't forget about them.
yeah, yeah. Exactly. One thing some people ask me about is like, do I think, or how do I think ads will be incorporated? Me personally, given my kind of like understanding of Elon, I don't think he's the type who's going to put a little screen right like in front of you and then like run ads, just to generate
No.
a couple dollars. I don't know if he'll do that. So I'm not a big believer in that, but I think some of the other components certainly, certainly
You
possible.
could you could wrap the vehicles.
Yeah, that's true. That's
I
true.
mean, he does do ads on X, so it's not
Yeah,
that he's against it 100%. But yes, you're right.
yeah.
There's so many things. I think, Cern, you modeled out one thing that if only Tesla added some additional revenue of 25 cents per trip, that's all it was. The
Hmm.
numbers get nutty.
Yeah, at
So
scale, it's huge.
Yeah,
it's like there's
exactly.
ways to get 25 cents per trip. So let's
Mhm.
go ahead and let's summarize everything we saw
Yeah.
here. This is the valuation output. Bull
Yeah,
case.
yeah.
Yeah.
So this is just kind of arriving at the numbers shown previously, but
Yeah.
basically
This
the
is how you,
perpetuity
yeah.
method and exit multiple method, anywhere from $200 to $300 in
It's what it should
today's
be
price.
worth today. Yeah, that's what
Yeah.
the price should be today.
And
Okay.
this is
And then
excluding FSD revenue. And also, CERN, this excludes surge pricing, which I think both of us have not really penciled in yet, because that could be a lot of upside, to be honest.
mhm.
But I don't know.
Yeah,
It's
Right,
worth
it
so
looking
could
at.
be. It's part of Uber's business model, and it's a way to throttle demand.
Mm-hmm.
So I think it is, whether you like it or not, it's in there. I have it as a line item in my models, but I don't include it at all.
Mm.
It's just in there to say this exists. And I'm just assuming on average that there's no surge pricing, but definitely there will be times when that's material.
Yeah.
okay. Let's take a look at what will happen to the stock price in the future, right? This is
Yeah.
what this is. Tell me.
Yeah, well, this one is the other valuation methods, just looking at PE multiple and then also, or I should say forward PE multiple and then forward EBIT multiple based on each year's earnings. So it's just basically looking at what the stock price might be trading at each of these years. That's the
Seems
goal
really
of this.
low. These numbers are much lower than most people will say.
Yeah, that was
You're
my goal. That was my goal, right?
you're
So.
not going to get to back to the all-time highs until 2028, and that's when you surpass Uber and Lyft. You've got a whole new business line. It's
Mhm.
completely changing the world, and you're only back to the all-time high that we've been at. Is that right? That doesn't look.
Well, remember this excludes everything else, right? So this is just the
Oh, I'm sorry.
autonomy business. Yeah,
Just the autonomy. Thank you. That's
yeah,
not the
yeah.
stock price of Tesla at the time. This will be
Correct.
the price, the value of
Excluding.
Robotaxi by itself. Okay, then there
Yeah.
you go. That makes sense. And
Mhm.
okay, there you go.
And
Makes sense.
Herbert, in the
Significantly
early
different.
days, you wouldn't have such a low PE ascribed to such a a
Yeah.
business with such opportunity.
Yep.
Another conservative input
Yeah.
on is kind of the
Mhm.
goal, right? And for me, I'm just trying to get a sense of like, hey, can we get to $1,000 before
Yeah.
2030? And I think it's pretty reasonable to say we will. So.
Just the Robotaxi alone.
This is a poster chart for showing why PE multiples are terrible valuation tools.
Exactly.
Yeah.
Okay. And then the statistics, which I don't know if we need to go through the
Yeah, we can
details,
probably
the
skip.
revenue inputs. You've done
Yeah,
that. The
these
30
are all
times
summaries.
multiple. Yeah. Okay.
Yeah.
So let's get to the summary of the key findings.
Yeah, yeah. So where I basically landed, right, is that there's huge intrinsic value even in today's dollar for Robotaxi. The only reason why it's not priced in is because there's a high discount rate related to some of those issues, that are still uncertain. Things like when will autonomy be solved? When will we launch? What does the ramp schedule look like? What is the competitive dynamics? What are the official business model, right? Like when those things get clarified, you can expect the discount rates to decrease. At least this is my framework for how to think about it. And then what I look at here is, basically landing on this perspective that at some point the market will be able to begin drastically reducing their discount rates, and the stock should have to play a lot of catch up. Given when you model it out, we're talking at least $200 in today's price. So, that's excluding everything else. So at some point, there will be something that sparks the great repricing, in my opinion. And the charts kind of line with that as well, that I showed in the previous thing, just showing NVIDIA and Meta, and then where Tesla is with their downtrend. So when the breakout does happen, my perspective is that it'll be harder to hold on during the real rally if you're not doing the homework right now and getting a sense of how big things can get within a realistic time frame as well, right? We're talking really over the next 5 years as opposed to maybe the next 15 or 20 years. So yeah, so I think it'll be one of those catalysts. We can discuss them individually, but
Go ahead.
these are my expectations. Like, it's either going to be the cybercab unveil, it's going to be the announcement of a supervised permit application approval or pilot launch, which I expect by the end of the year. Given the fact that cybercabs are going to go into production in 2025, right? There has to be some plan to deploy them and utilize them. So I also think that there will be an FSD OEM licensing deal announcement made by the end of the year. And I have a few slides separately around the game theory behind this stuff, and why it would make the most sense to be an early adopter as opposed to late. So I think and Elon said they're already in talks. So we'll see. We also have, it could just be as simple as the FOMC cutting rates, or the Fed, starting to cut rates, as early as September. I think the market is expecting 2 rate cuts, so September and maybe either November and December. And the stock could react violently to the upside as a result of that alone. Or it could be the release of version 13 or unsupervised pilot launch, the production of cybercabs actually beginning. Like, I'm hoping, obviously, it's not the latter ones, right? Like on this list, because it's further out in time. But all I'm trying to get a sense of is, what are the key catalysts, and when am I expecting them? And it should be one of these that spark the great repricing. I would be shocked if it's none of these, right? Then basically the stock is like kind of dead, and there's no hope, and everyone's wrong.
Yeah.
So
it's funny because I had the same conversation yesterday, and what you pointed out here was, you said we don't want it to be the later, but the later one is a year and a half away from now.
Yeah.
That's fine. I'll wait a year and a year and a half from now. Okay. Do you know what I mean? Fine. It's just interesting that all of these events we are anticipating to happen soon, this year and this next year. So we're here.
Justin, if you had to pick one as the catalyst, which one would you pick?
It's a toss-up between cybercab unveil and the Fed cutting rates.
Mm-hmm.
What? Really?
Yeah. No. I mean, the pilot launch, maybe that's in the runnings too. Like, I think that would obviously be huge. That might be the one out of all of them. I mean, that was like, I went to a shareholder meeting in 2022, and that was the one question I landed on for Elon, right? I was like, because to me, that's probably the most important one. I just don't know if it really can happen. The announcement can happen by the end of this year. I think that's kind of a push, because we just have no idea. Like, so it's hard for me to guess. But I would say FOMC is pretty low-hanging fruit, and cybercab, yeah. I
will say that cybercab, any type of unveils or demos, rarely, if anything, they make the stock go down. I don't think the interest rates will affect the Robotaxi, repricing, but it'll certainly impact the current auto business. It will need to be the unsupervised pilot launch or the production. So this is Q1. That's really the key thing, I think, because by that point, all the questions would have been answered.
Yeah, that's a fair point. I was expecting that the cybercab, might have comparable depth to Autonomy Day in terms of like the amount of discussion. Like, I don't think it'll just be an unveil because of how Elon is thinking about this. I think there's a really interesting quote from the book that kind of lended some perspective on that. He thinks it's going to be mega historically important, right? So I think it'll be a good event. I think it'll be really insightful. I think he'll share a lot that people are not expecting. I obviously do not like to get too hyped up about events, but I think this event will be good.
How many of these catalysts that you have listed here could actually happen on 8/8?
I think version 13 could be teased, like showing what Grok integration would look like. I think a licensing deal could be snuck in there. I think the approval of a launch city, even if it's not specific, but he says, hey, we're
Yeah.
launching in 2 cities next year, right?
Yeah.
We're already in talks.
Yes.
He could say something like that. So, I mean, probably a couple of these. Yeah.
Yeah.
Yeah. Maybe I should have them as sub bullet points. It's like,
well, it's interesting to think as you stack them,
yeah.
what that might do.
Yeah.
But yeah,
Oh,
no,
right.
that's a great list of catalysts. So thank you for putting that together. It's great.
Yeah, and my goal is just to keep this updated. It's a tool for everyone, right? And I try to share it out broadly, and it's just a good way for us to kind of. There's a lot of moving pieces, so it's a good way to kind of just consolidate and keep organized, because it's going to get crazy. It will. I was there in 2019. I saw how violent the rallies were. It's very hard to hold on when it's like day 8 in a row and Tesla is up 7%, and it's like, oh my God, should I take profits? Like, okay. So I don't know. It'll be tough. I'm trying to mentally prepare for it.
I appreciate this. One of the things you've done here, Justin, I think no one else has done, is not only the financial modeling, but what you did here was show, sanity checks, right? Bull case, bear case, like everyone else does. Then you walked us through the actual business models, but then you showed what is the impact to the actual stock, right? Why is it that people don't see it today? And what you called the great repricing. And then you laid down the variety of milestones. And I think you answered the question well, right? You have to decide when is it going to happen, what milestones will need to be achieved. And then you laid it out, the thinking of when those things are. So I feel much more confident now in terms of the timing specifically that you mentioned now, because, the sanity checks really help. Thank you for doing that, bro. Justin. I appreciate this.
Justin, really solid work. Thank you. And I can't wait to see your work on bots when you turn your attention to that.
Right. Yeah. I know it's been on my to-do list for a long time. I'm like Gary Black in the sense that I assign 0 value to Optimus because I don't know anything about it yet. But I see all of your guys' work. I mean, it's huge. So yeah. So
that's another topic for another day, because I actually, while you guys are all very optimistic about Robotaxi, I think that bots are going to happen sooner than what you see here. For a variety of reasons, we can debate that. But thank you so much, Justin. Follow him at X at SMD Capital 88. If you are interested in not only the future of Tesla stock, but actually options trading, financial, not financial advice, but financial analysis that he does, take a look at him. Take a look at follow him, because he shares the kind of his thinking. And as you see here, this is not just willy-nilly guesses. He's actually putting some numbers down. Thank you so much, Justin. Thank you, Cern, for joining us. Go check out Cern as well. We've done several videos, and he's done a number of these deep dives as well. So appreciate you both joining. Thank you.
Thank you so much.
Thanks, Herbert.
That was a good chat.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.